Yeah.
Okay, Matt, what's going on in the supply? I've heard there's a ton of units coming online. I've heard numbers like 1.1 million in the pipeline, la-di-da. What does it mean? What do we see coming down the pike?
This is a real prediction of the future here. So they have, year by year. In 2023, they are expecting by the end of the year 487,512 new apartments entering in the market. 2024. Even more. So as much as 2023 was dominated by the idea of new supply, we're going to get in next year 536,145 apartments. That is
so we're just really getting started.
Yeah. It is a crazy increase. And following that, even in 2025, you have 451,430 new units coming online. And then it's only really in 2026 where there is a reduction, and it goes back down to 377,622. Wow. And then on from there, 27 and 28, around 400,000. 400,000 is a healthy high number. I think
it's still high. Matt, let me ask you, something real quick. How are they projecting, outside of 2026? They're projecting, 400,000. Are these actual, plans, permits, or are they extrapolating out what they believe is going to be delivered? Because, most projects, usually, 36 months or so. So I can see having good insight into 2025 through 2026, 27, 28.
Yeah, there's a little bit of mysticism, I think, in there.
What do you think?
And I think that they do actually lower in the report. They have a worst case and best case scenario. So I'm sure they're relying on permit starts and the information that's publicly available about all this kind of construction activity, and then extrapolating on that, because a lot of times permits will get dropped.
Well, that's why I'm asking. Is because I know there's a lot of people who are interested in building, but the financing isn't there. The deals aren't penciling right now. Just like we talked about, just the interest rates are making it really difficult, and the leverage, the credit just doesn't exist like it used to. And so we're seeing a lot of pencils, kind of being, or a lot of projects being, mothballed and, or just passed on. And even some, companies I see are, laying off, portion of their development team just because the projects they don't have any projects to work on right now. And so I'm curious, in this number, really, I think most of the deals that are going to be delivered in 2024 and 2025, these are, I would believe that these were pretty well baked.
Yeah.
But outside of this, I could see it come in, I would imagine that we might see these revised down.
Yeah, especially because the typical time, and I don't know what the time is from permitting to end, but usually it's about 24 months. To get something built. So 2028, this could just be, the gleam in someone's eye or something. It's maybe not even started yet. But I do like that they have, they factor in what will happen if in a more maybe downbeat economy. And even in a downbeat economy, there's still a healthy amount of new supply. I wonder if the 26, 27, 28 numbers will be a little lower than they expect, but that's all going to really maybe depend on how much gets built and how much gets financed, and if things are higher for longer.
Well, here in this statistic, they are showing that the starts are dropping off. Having units started, structures with 5 or more units. That monthly number
that is a really
starting to come down.
Yeah,
but still, as it stands, we're at peak. This is just going back a couple of years, but certainly we're building more units than we have ever built in the near term. And then I think what's important is we're just talking about right now just national numbers, which can tell you something, but not that useful if you're an actual investor looking into investing in a deal, because there's some markets with no new supply coming online.
And that's super important. Is supply is a local thing, and that's one thing. I think that rents and supply national numbers, that's great as a yardstick, as a general vibe.
Yeah.
But if you really want to know what's happening, you gotta look at the market that you're involved in.
And we've seen a lot of correlations. I know RealPage has done a lot of work on this as well. Seeing a big correlation between markets that have high percentage, of inventories, relative to, or here you're either calling it percentage of stock, and low percentage of stock markets, with the high percentage of stock markets really seeing slow negative growth. And markets that don't have a lot of supply, low percentage of stock, are seeing really decent rent growth. This is top 15 market for forecast new supply number of units. I don't really know what that means, Matt.
Well, look at this.
Top units is top market, just large.
So the number, and then below is like the top percentage
supply, top supply.
Yeah.
Yep.
And look at how much.
Yeah, 20,000 units coming online in 23. Another 17,000 coming online in 2024.
Look at Austin. They're adding 7.5% to their stock this year, which is a lot, and then next year 9.2%. Added.
And if you look at the 2 years combined,
wow.
That's incredible.
So that's
almost 18%.
Wow, that's legit incredible. And it's not an unusual story. Now that's a big increase upon an increase, but it's not like it's alone. Charlotte is 2.77% increases in their stock in 2 consecutive years. So this is like I said, 2024 is not going to be a rest or relief, especially for some of these markets.
Yeah.
And then
Huntsville, these are the top markets as a percent of stock. Huntsville, 2024. Well, 2023, we knew this. I remember talking about this last year, man.
Yeah. Delivering,
almost 13% of stock. Then next year, another 6%. Southwest Florida coast, 9.4% this year, 7.5% next year. Colorado Springs, Matt, 8.4% in 23, 10.3% in 2024 is expected to be delivered. These are a lot of units. Again, Austin on a number of units, but also a percentage basis. That we've already talked about the percentages. That's a lot.
Look
at
this.
Units.
Madison, Wisconsin looks like the only one in this list that is in the Midwest. Yeah. Now I'll have to look at the numbers and if you scroll up to the numbers for, on purely numerical basis, I don't think that there is a Midwestern market in there. Not if Nashville. I don't think Nashville counts. That's
only if we wanted it to. But.
Yeah. But so they're still not building as much in the Midwest as they are in the Sun Belt and the kind of Mountain West areas. But totals.
This is something key to watch because again, if you are looking at a deal, one of the big assumptions that is much less certain today than it was in previous years and previous cycles is what is that rent growth assumption? What is the organic rent growth that you may or may not get in the first couple of years? Mm-hmm. That growth rate is compounding, and getting a good return on real estate is to be able to deliver a decent amount of growth in year one, on a stabilized acquisition, so you can compound off that growth. Mm-hmm. So if you're growing by nothing in the first year, that's not a great number to compound off of. You're a whole year behind. Time is valuable. Time is money. And if we're looking at an IRR, internal rate of return calculation, again, you're basically adding a whole other year on the period, but no growth in one of the periods. Yeah. So there's no way that you can achieve, decent looking returns. And if you're going to see, very slow growth for several years, again, then that's just further challenge to modeling and doing a reasonable portfolio. Mm-hmm. If there's going to be, 500,000 units delivered, every single year, which I'm skeptical past couple of years. But if that's the case, and so that's why we just need to really keep watching. Yeah,
and if valuations are a product, which they are largely a product of the income generated by a piece of CRE or like a CRE property, then it's hard to think that we have completely reached bottom if we're looking forward to a year.
It's a good point. And I also think that it underlines the current strength of the Midwest and some other select markets around the country, and some kind of short-term weakness in the Sun Belt just with all the supply that's going to be coming online. There's a lot of these big growth markets looking at at least another year or two of slow no growth, which we know all the acquisitions in those markets. The whole thesis was to high growth. So everyone was, plugging in high growth numbers.
The only caveat that I would have to this picture of perhaps like rent stagnation in 2024 is I think that a lot of the lower rent growth in 2023 was like we're in the wake of the super high rent growth that we had the previous. So it was kind of a reaction from people's pocketbooks. And so I think that that's a little bit in the past, and that may help rent growth a little bit in 2024 as people are like, all right, I can deal with this. That's my hope.